afternoon, VA community. Happy Red Friday. Remember, RED stands for Remember Everyone Deployed. My name is Nate Burt, and today you have the privilege of listening to me for a couple minutes. I know you guys usually listen to Major Lewis, who's way better looking than me, and Eric Kandel, who is also better looking than me. So you get to deal with me for just a quick minute on a topic that probably most people don't understand, which is VA assumptions. So VA assumptions, when a veteran gets a home loan, they get all these documents, and in them there's a note that says, notice this loan is not assumable without the approval of the Department of Affairs or its authorized agent. So we read that all the time, but not a lot of people know what that actually means. So I'm going to explain a little bit of why there's assumptions, why we should do them, what are the drawbacks and the benefits. So first off, we're going to start with the first bullet point. It requires VA and lender approval. So an assumption is basically like a transfer of ownership, right? So a veteran has a VA home loan, and it always works in a sale transaction, not a refinance transaction. It's to sell your home. So somebody who is a veteran or isn't a veteran can actually come in and assume the loan. That means that they're assuming the terms, like the rate, the balance, things like that, and the payment and whatnot. And that is a benefit in a market where maybe interest rates are really, really high, and the veteran needs to sell his home, but the person buying it can't qualify because maybe rates are at 6%, right? And he has a 3.25%. So he can assume that loan and have a lower monthly payment than what the going market rate is for interest rates. So that's a benefit, right? But it's not like he can just come in and take over the loan. There's a process that goes into that. And one of them is that VA and lender approval. So the person buying the home who assumes this loan has to go through an approval process, right? The VA has to approve it. The lender has to approve it. Okay, so once that approval is given, he can move into the house. That loan is now assumed to his. The drawback of this is that because it's a VA loan, there has to be VA entitlement attached to the home. So what if the person assuming the loan isn't a veteran? Well, that means that the veteran who sold the home, his entitlement is still attached, even though he's not per se responsible for the home or the loan on that home. His entitlement is still intact, assigned to that other person making the payments. So if that person decides to default on the loan, that veteran who's now gone has the responsibility where his entitlement could be in jeopardy. So that's the risk involved in doing that. So the person assuming the loan must be creditworthy. We talked about that, right? They have to go through this approval process and get approved basically for the home loan that's already in existence. The loan must be current. This means that the veteran's loan, the loan that's being assumed, has to be current. It has to be in good standing. It can't be in default. They can't be behind on payments because they're not going to assume a loan or transfer that loan if it's not in good standing. And this part right here, you may be able to keep your VA entitlement after selling. That is only if the person assuming the loan is also a veteran. Remember I said that you have to have this entitlement that's always attached. So if a veteran is assuming that loan, he can attach his or her entitlement to that new loan or to the loan, and it frees up that entitlement of the veteran selling. So there's a lot more involved in this than what we've just talked about, but just for the purposes of everyone understanding what an assumable loan is, these are some of the benefits of how that happens. And I feel personally that it could be, especially in a market where interest rates are high and someone needs to sell and they can't qualify for a higher rate. So that's it.